Welcome back, everyone. Today we're taking a deep dive into something that impacts millions of Americans.
It sure does.
The history and the potential future of Social Security taxation.
Yeah.
We're going to uncover how we went from a time when Social Security benefits were completely untaxed to a time where we are now, where a significant portion of beneficiaries are actually paying federal income tax.
A lot of people don't realize that.
Yeah. So before we get started, though,
Sure.
if you find yourself enjoying these deep dives into complex topics,
Yeah.
hit that subscribe button to stay updated on future deep dives.
Please do.
Now let's dive in.
All right.
Okay, so let's start with the beginning,
Okay.
which is a pretty surprising fact.
Yeah.
For nearly 50 years, Social Security benefits were entirely exempt from federal income tax.
That's right.
Imagine that.
Can you imagine?
Receiving your retirement income completely tax-free.
It sounds pretty good.
It sounds pretty good.
It does.
It sounds almost too good to be true.
It does.
For those of us who are used to seeing taxes taken out of almost every paycheck,
Yeah.
it's wild to think that there was a time when Social Security benefits were
I know.
completely untouched by the IRS.
Yeah. It really highlights how significantly our approach to social safety nets has shifted
It really does.
over time.
Yeah.
You know, the introduction of Social Security in 1935
Right.
during the Great Depression
Right.
reflected a very different socioeconomic climate than the one we're in today.
Totally. Okay, so let's talk about that shift.
Okay.
When did things start to change?
Well,
What triggered this move toward taxing Social Security benefits?
yeah, the turning point came in 1983 with a series of amendments that introduced this concept of provisional income.
Yeah.
And this became the litmus test for whether or not your benefits would be subject to federal income tax.
Now, I know some of our listeners out there might be very familiar with provisional income.
Sure.
But for those who aren't,
Yeah.
could you break down what exactly it includes
Yeah.
and how it determines the taxability of benefits?
Absolutely. So provisional income is a calculation that takes into account your adjusted gross income,
Okay.
any non-taxable interest you may have, and of course your Social Security benefits.
Right.
If this total exceeds a certain threshold,
Right.
a portion of your Social Security benefits become taxable.
So it's like a line in the sand.
That's a great way to put it.
If you stay below the line, your benefits remain tax-free.
Yes.
But once you cross it, the IRS starts taking a cut.
They do.
I find it fascinating that initially,
Yeah.
this change only impacted a small percentage of beneficiaries.
Right.
Less than 10%, in fact.
Less than 10%. That's right.
But here's where it gets really interesting,
Okay.
and where the seeds of a future controversy were sown.
Uh-oh.
The lawmakers who introduced this system in 1983
Right.
failed to account for the erosive power of inflation,
Inflate. That's right.
the inflation trap.
Yeah.
I've heard economists talk about this.
They do.
And it makes sense if the provisional income thresholds
Yes.
remain static while the cost of living continued to climb.
Right.
It's inevitable that more and more retirees would find themselves pushed over that tax line.
For sure.
It's almost like a hidden tax hike.
You could say that.
Right.
You could definitely say that.
Think about it. In 1983, the provisional income threshold for a single filer was $25,000.
Right.
That might have seemed like a reasonable figure back then.
It did.
But because of inflation,
Yes.
$25,000 in 1983
It's okay.
is equivalent to roughly $80,000 in today's dollars.
Wow.
Wow, someone in 1983 making $25,000
Right.
paid zero taxes on their Social Security.
Right.
While someone today with the equivalent purchasing power, $80,000,
Yeah.
could have a whopping 85% of their benefits taxed.
85%.
That's the stark reality of the situation.
It is.
And it explains why Social Security taxation has become such a contentious issue.
Yeah.
Especially as more and more retirees feel the pinch.
They're feeling it.
So I want to pose this question to you.
Okay.
Do you think it's fair that the thresholds haven't been adjusted for inflation? Essentially, dragging more and more retirees into the tax net.
That's a good question.
Let us know in the comments.
Yes.
What you think about that.
Yeah, and if you are finding this deep dive into the history of Social Security taxation insightful,
Yeah.
be sure to give it a like.
Yes.
It really helps us out.
It does.
And it helps other people find valuable information like this.
It does.
So,
It's certainly a point worth pondering,
yeah.
especially as we head into the next part of our discussion,
Okay.
where we'll be exploring President Trump's stance on Social Security taxation.
Right.
and examining the potential benefits and drawbacks of eliminating those taxes altogether.
Sounds good. So eliminating Social Security taxation.
Yeah.
I mean, it's a proposal that certainly captures attention, doesn't it?
It does, you're right.
Especially for those retirees who see a significant chunk of their benefits disappear to taxes each year.
Yeah. It's a promise that resonated with a lot of voters.
It did.
But like most things, in the world of policy, it's not as simple as flipping a switch.
Right.
There are ripple effects to consider.
There are.
Both positive and potentially negative.
Exactly. So let's start with the potential upside.
Okay.
For retirees heavily reliant on Social Security.
Okay.
Those for whom it makes up 50% or more of their retirement income.
Right.
Eliminating taxation could be a game changer.
It's easy to see why that would be appealing.
It is.
More money in their pockets means more financial security, more freedom to cover essential expenses, and maybe even a little extra to enjoy those golden years.
Precisely. It could make a significant difference in their quality of life.
Yeah.
But this is crucial. But we have to consider the impact on the long-term sustainability of Social Security itself.
The program is already facing a projected funding shortfall.
It is.
With the Social Security Trust Fund.
Yes.
Estimated to be depleted by 2034 if no changes are made.
That's right.
And that depletion, while not the end of Social Security, could lead to significant benefit reductions.
It could.
Potentially as much as 20%.
Wow.
Imagine that instead of receiving $100 in benefits, you might only receive $80.
Yeah, it's a big difference.
That's a substantial hit, especially for those who depend on Social Security as a primary source of income.
Yeah, it is.
So how would eliminating Social Security taxation play into this scenario?
Well,
would it help or would it hurt?
That's the million-dollar question, isn't it?
It is.
While removing those taxes would provide immediate relief for many beneficiaries, it could also hasten the depletion of the trust fund.
Right.
Remember, those taxes contribute significantly to the program's funding.
So it's a trade-off.
It is.
Short-term gain for some versus potential long-term pain.
Right.
For the system as a whole.
For everybody.
It really highlights the complexity of these issues.
It does.
The delicate balancing act that policymakers face when trying to ensure both individual well-being and the program's solvency for future generations.
That's right.
It's not an enviable position to be in.
It's not.
And it underscores why it's so important for everyone to understand the nuances of these issues.
It does.
To move beyond simplistic solutions.
Yeah.
And engage in thoughtful discussions about the path forward.
That's the key.
Okay, so if eliminating Social Security taxation is potentially off the table, or at least a very complex proposition, what other options are being considered to address this looming funding crisis?
There are a number of proposals being floated, each with its own set of pros and cons and its own set of winners and losers. One idea is to increase the Social Security wage base, which is currently capped at $176,100.
Okay, so let's unpack that for our listeners.
Right
now, only wages up to that $176,100 threshold are subject to Social Security taxes.
Correct.
Any earnings above that are essentially exempt.
That's right.
The idea here is to either raise that cap or eliminate it entirely, right?
Yes.
By increasing the wage base, you'd be capturing more income from higher earners, potentially generating a significant amount of revenue to bolster the Social Security Trust Fund.
That's the idea.
It seems like a logical approach.
It does.
But I imagine there are some strong arguments against it as well.
Oh, absolutely. Critics argue that it places a disproportionate burden on higher earners, particularly those who might already be paying a substantial amount in other taxes. They also point out that Social Security benefits are capped, meaning even if someone pays taxes on a much higher income, their benefits won't increase proportionally.
That's a good point.
Yeah.
It raises questions about fairness.
It does.
And whether higher earners are getting a fair return on their investment, so to speak.
Exactly. It's a valid concern. And it leads to lively debates about what constitutes a fair and equitable system.
Sure.
Now, another option that often gets tossed around is raising the Social Security tax rate itself.
Currently, both employees and employers pay 7.65% of wages. Up to that wage base we discussed earlier.
That's right.
So bumping up that percentage, even by a fraction of a point, could generate billions in additional revenue, right?
In theory, yes.
Okay.
But it's rarely that simple in practice.
Right.
Politically, raising taxes is always a tough sell.
It is.
Even when the intended outcome is safeguarding a program as vital as Social Security.
I can see why.
Yeah.
People are already feeling squeezed.
They are.
And no one likes the idea of seeing their paychecks shrink even further.
Nobody does.
And there's another layer of concern.
What's that?
Opponents argue that raising the tax rate could have negative consequences for businesses.
Potentially slowing economic growth.
Right.
And job creation.
Yeah.
It becomes a delicate dance.
It does.
Between ensuring the program's financial health and avoiding actions that could harm the overall economy.
You got it.
So it sounds like a bit of a tightrope walk for policymakers.
It does.
Do you think the potential benefits of raising the tax rate outweigh the potential risks?
That's a great question.
I'd love to hear what our listeners think about this.
Me too.
Let us know in the comments below.
Yeah.
And if you're finding this analysis helpful,
Yes.
give this episode a like.
Yes, please do.
It helps others find valuable information like this.
It does. It's a question that sparks heated debate.
It does.
Among economists and policymakers.
It does. It's a complex issue for sure.
Yeah.
Lots of passionate arguments on both sides.
Yeah.
But let's move on to the third option.
Okay.
That's often proposed to address Social Security's funding challenges.
Okay.
Delaying the full retirement age. Ah, yes. This one tends to spark quite a bit of controversy, doesn't it?
It does.
Currently, the full retirement age is 67.
Right.
But some policymakers suggest pushing it back even further, perhaps to 68 or even 70.
I can see why that would be met with resistance.
Yeah.
Essentially, it means asking people to work longer
Right.
before they can collect their full benefits.
Right.
For those in physically demanding jobs or facing health challenges, that could be a real hardship.
You're highlighting a crucial point.
Yeah.
The human impact of policy decisions.
Right.
It's one thing to crunch numbers and analyze spreadsheets,
Yeah.
but it's quite another to consider the real-world consequences for individuals, especially those who might be struggling to make ends meet or whose bodies are simply worn down from years of labor.
It raises ethical questions too, doesn't it?
It does.
Is it fair to ask people who've paid into the system for decades
Right?
to delay their retirement,
Uh-huh.
potentially jeopardizing their well-being, all in the name of extending the program's solvency?
That's a valid concern.
Yeah.
And it underscores the need for a comprehensive approach.
Right.
One that considers not just the financial health of the program, but also the well-being of the individuals it's designed to support.
Absolutely.
Yeah.
We can't lose sight of the human element
No,
amidst all the policy debates.
we can't.
But even with all these challenges and potential solutions swirling around, I think it's important to empower our listeners with some practical steps they can take right now to maximize their Social Security benefits,
Yes.
regardless of what the future holds.
I completely agree. Knowledge is power,
It is.
especially when it comes to planning for retirement.
Right.
So let's shift gears a bit and talk about some proactive steps people can take.
Okay.
First and foremost, understand how your benefit amount is calculated.
Yeah.
It's based on your earnings history, specifically your 35 highest earning years.
So if someone is listening who's maybe in their 20s or 30s, just starting out in their career,
Right.
this is a crucial point to grasp.
It is.
The decisions you make now, the effort you put into building your career and maximizing your earning potential
Yes.
can have a ripple effect
They don't.
decades down the line when it comes to your Social Security benefits.
Precisely. It's like planting seeds for your future financial security.
Yeah.
Each year of solid earnings contributes to a stronger foundation for your retirement.
It's also important to make sure your earnings are accurately reported
Oh, that's important.
to the Social Security Administration.
Yes.
I know it might sound tedious, but checking your earnings statements regularly
Right.
and addressing any discrepancies can make a real difference in the long run.
You'd be surprised how often errors occur.
Really?
And those errors can have a significant impact
Yeah.
on your benefit calculations.
Yeah.
It's your responsibility to be vigilant and ensure your earnings record is correct.
Absolutely. Now, another key decision that significantly impacts your benefits is when you choose to start claiming them.
Right.
You can start collecting Social Security as early as age 62.
You can.
But there's a trade-off, right?
Yes, there is.
Claiming early means accepting a permanently reduced benefit amount.
It does.
For each year you delay claiming
Okay.
up to age 70. your benefit amount increases.
That's how it works.
So if you can afford to wait, it often makes sense to delay claiming until your full retirement age, or even later, to maximize your monthly income.
Exactly. Those extra years of waiting can translate into thousands of dollars in additional benefits over the course of your retirement.
And for couples,
yes,
there are even more strategic considerations.
There are.
Coordinating claiming strategies to maximize combined benefits can get quite complex.
It's true. Couples have a range of options available, including spousal benefits and survivor benefits.
Okay.
Navigating those choices and figuring out the optimal approach can be overwhelming.
Yeah.
Which is why seeking guidance from a financial advisor who specializes in Social Security planning can be invaluable.
Great advice.
Yeah.
We've covered a lot of ground today.
We have.
From the surprising history of Social Security taxation to the challenges facing the program and potential solutions.
Right.
And we've empowered you with actionable steps to take control of your own Social Security journey.
Yes, we have.
Remember, staying informed and engaged is crucial.
It is.
This is a conversation that affects all of us.
It does.
And our collective understanding and participation can help shape a more secure future for Social Security
Yes.
and the millions who rely on it.
It's important.
So if you found this exploration of Social Security valuable and insightful, please show your support by leaving a like.
Yeah, and don't forget to subscribe so you can stay up to date on future deep dives into fascinating topics like this.
Thanks for joining us.
See ya.